Hey everyone, Rivian is making huge strides towards profitability. Of course, the company is still losing a lot of money on the bottom line, investing in growth, but it's making great progress along the way. So in this video, I'm going to highlight some of its progress in the latest quarter towards profitability. So let's get right into it. Starting with production, the company produced 13,992 vehicles and delivered 12,640. That was the primary driver of the 1.1 billion in revenue for the quarter. As the company ramps up production, that increases the money that goes to the bottom line, something that's called contribution profit, because to make each vehicle is more profitable, the company has invested a lot in terms of fixed expenses, things like manufacturing overhead, which Rivian has to pay regardless of whether or not it produces and sells cars. So with the more cars it produces and sells, it splits up or spreads out that fixed expense across a greater number of units, thereby lowering the cost per unit, thereby increasing profitability. Also, the company generated 34 million in proceeds from the sale of regulatory credits. The company expects the sale of regulatory credits to increase over time, but to have a lot of variability up and down. These are huge for profitability because these are almost 100% profits. There is no cost of goods sold associated with regulatory credits. It's not like when the company sells a car, the company has spent a lot of money to sell that car. With regulatory credits, there isn't that kind of expense. So these are positive, just go straight to the bottom line. That's big news for a company like Rivian that's struggling with losses on the bottom line. To have that benefit, it just builds up momentum and has makes it easier for the company to ramp up production. So here was the biggest news in the quarter is that the company improved their gross profit per vehicle by approximately $35,000 compared to the first quarter of 2023. So quarter over quarter, the company made a $35,000 per car progress towards profitability. That's a big deal. If you think about the average selling price of its cars between $70,000 to $90,000, let's say, that's a big improvement. The primary driver of that improvement includes fixed cost leverage that I was talking about earlier. When you produce more units, your overhead gets spread out across more units and thereby the cost per unit gets decreased. And so that's the biggest driver. Another is a technical term I won't go too much into, which is the LCNRV inventory write-down and losses on firm purchase commitments. These are accounting issues. The company took a loss and had some write-downs because it made agreements to sell a certain amount of cars at a certain price when it was going to produce, when it thought it was going to cost a certain amount, but the costs changed, and so the company was going to incur a loss. And so accounting issues, we won't go into too much details on that, and because it's not a longer lasting benefit, it's more of a one-time thing that will not happen regularly for the company in the same way that it will continue to benefit from fixed cost leverage as it continues to ramp up production. And then finally, the material cost reduction and increased revenue per vehicle. So Rivian has raised prices on its cars, and also it's experienced a material cost reduction, right? So earlier it needed to pay a certain price to suppliers to get these materials. It now has been able to negotiate lower prices. And this is a benefit of scale. The larger you get, the more units you produce, the more negotiating power you have with suppliers, and you could go back to them and say, hey, we're a bigger company now, we're more stable, we're going to ask for better terms, and if you don't give it to us, we know there's other suppliers that would be willing to give us better terms. And so Rivian was able to do that, and that was one of the reasons it was able to lower its production costs as meaningfully as it did. And so they're seeing a 35% reduction in material costs in their vans compared to the fourth quarter of 2022, and they continue to see strong progress on their R1 material cost reduction. I would have liked to have seen a quantified figure here. I like how they quantified the material reduction cost at 35% for the van. why not give us a percent or a number for the R1 material cost reduction? Even if it's small, just give us that number, 5%, 10%, whatever it might be. Don't just tell us that it's a material, it's something, right? Finally, total gross profit for the quarter was negative 412 million. That was compared to a negative 704 million in the same period last year. So strong progress, nearly 300 million improvement in terms of gross profit loss on the year over year. So excellent progress from Rivian here in this current quarter. And you might ask, why did the stock price fall after the company announced results for the quarter? And I think the big disappointment, and I've been saying this across several of my Rivian videos, is that the company is not forecasting a similar improvement in the third or fourth quarter of this year. They're saying that the bulk of the gains that it was going to make was made in this quarter, and they expect the rest of the year to play out similar to the way this quarter played out. So that's where investors were a little bit like, oh man, we were hoping for continued improvement in this way. But nevertheless, it was an excellent quarter from Rivian, making huge strides towards profitability. But that's all I've got for this video. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.